Hey traders, Jason here from Lever Brothers. So I'm going to do an update of my State of Market series, see what's going on with the indexes with breadth. The market moved down pretty hard last week. This week it's bouncing back. You know, you get this movement up and down. Sometimes you want to take a step back and see what's going on. So we're going to look at the indexes. We'll look at breadth, different breadth readings, and try to get an idea of like where things are. Is the market strong? Is there like hidden strength? Is it really weak? Is there hidden weakness there? Just want to get an idea of what's going on. All right, so first off, here is the S&P 500. Same chart I've posted in, for many months. Big cup and handle pattern, big rally. Now we have, a consolidation pattern. The index is unchanged going back a few months. There's nothing really wrong here. I mean, we have, when you have like a huge rally here, you have a huge rally starting at 3,500, goes up to 5,600. There's nothing wrong with having a couple months of sideways movement. It's all we've had. We had a huge run here, pullback there, exaggerated by the carry trade news, almost a full recovery, then hard down last week, and now we have a pretty good up this week. Nothing wrong with several months of consolidation coming after a really good run. So overall, the big picture is in really, really good shape. There's nothing here that says we have warnings. All moving averages moving up. Just everything looks good here. There's no warnings as far as the weekly price chart. Here's the NASDAQ. It's similarly set up, not quite as good because you have, whereas the S&P 500 nearly got back to its high, the NASDAQ didn't even really get close, okay? It fell just as much, but it didn't rally back as much. The NASDAQ is home of a lot of, really important tech stocks and even non-tech stocks like Costco. So the fact that it failed to get up is a little bit of a warning. Okay, it's not something we should ignore. But overall, I see a high here, low here, high here, low here, and now price is right there in the middle. Okay, I see some big swings, and they're tradable in both directions. There's nothing here that says, like, the big picture is positive, okay, because we're moving, like this and now consolidating. Shorter term, like over the last 6 months, big high, big low, lower high, higher low, price now sitting in the middle. I'd say we're like neutral and range bound and lacking direction, which is fine. We just had a huge rally. It's September. The market tends to be weak now. There's nothing wrong with having a consolidation pattern and for the price to be trading in the middle of a range during the weakest time of year, especially when, we got an election coming up and we don't know what's going to happen with rates. So there's some things that are lingering out there, but there's nothing wrong with being neutral within an uptrend. Here is the S&P daily. Okay, so we know we've had swings. Okay, big swing up, big swing down, big swing up, consolidation, big swing down, and now I should say that's like more of a moderate swing down. Now we have a moderate swing up. Again, overall, index is in great shape, but over the last couple months, we've just swung up and down in a 10% range, and there's nothing wrong with that. Just be flexible, be open-minded. If you're a long-only trader, then you want to be long when the market's moving up and then step aside when it goes down. If you're a little bit more flexible and can trade each way, go for it. But what you don't want is you don't want to like dig your feet in and defend a position. Okay, you don't want to have like that strong an opinion. Or, the old saying is like strong opinions loosely held. Be open-minded. The market's moving up and down. Okay, there are directional moves that are playable, but overall we're in consolidation mode. But overall, it looks, to me, it looks fine. Okay, we have a high, highs over here. There, we've had several months of consolidation price action within a big range. There's nothing wrong with that. The big picture remains in good shape. Here's the NASDAQ. The biggest note here is what I've already noted, is that the inability to move up and match the high. So that's notable, especially considering the number of important stocks are at the NASDAQ. High there, low there, high there, low there, and now price is smack in the middle. Okay, so the S&P looks more like a consolidation pattern within an uptrend. The NASDAQ looks more like a neutral pattern where the swings are big and it doesn't have the feeling of a consolidation pattern within an uptrend. It feels more like a neutral sideways pattern. All right, now let's look at some breadth. All right, so here is the 10-day, 10, 20, and 50-day moving average of the NYSE AD line. Okay, nothing wrong here. Market was flat and then came down. The 10-day MA just simply cycled down a little bit below zero and is now bouncing. That's perfectly normal. Nothing wrong with that. If the market was really weak, we'd get a much deeper print, but it's not. But like this price action just simply tells me that what took place over here was just a pullback within an uptrend. Nothing, there are no warnings here. The 20-day maintained a high level, no warnings there. The 50-day also maintained a high level, having broken out in mid-August, to its highest level since back in April. So the advanced decline line on various look-back periods tells us that what has taken place recently was just weakness within an uptrend, and there's nothing that points to this morphing into something worse than that. Here's the 5-day moving average. I've posted this on Twitter a few times. In a downtrend, you can see on the left side of the chart, you get numerous plunges below minus 1,000, but when the market returns to its uptrend, you get very few plunges. You can see here, there's only 2 of them. You got a big one there and a big one there. Okay, so like if you didn't have access to the price chart, but you only had access to the indicator, you'd be able to like look backwards and say, okay, the market's in good shape or not good shape. And the fact that we have, the fact that we have like no plunges over here, even though that was a huge move down, last week was a little bit painful, nothing down here in the minus 1,000 range. So it tells us that the market, it tells us that these pullbacks are just pullbacks within an uptrend, not the beginning of a downtrend, simply because we never got a deep plunge from the 5-day moving average. All right, another one, last one with the AD line. This is the AD line. This is the cumulative AD line. And as you can see, it's just trending up. It's channeling up, 2 steps forward, 1 step back, 2 steps forward, 1 step back. Higher highs, higher lows, just trending up. There's nothing here that tells us that anything is, that we're in trouble in any way. Like you can see like this was just a moderate pullback for 3 months, and you can see the AD line trended down. But even so, like even though this was big and this was big, that was a higher low, that's a higher low. There was nothing here that said that the market was in trouble of like truly rolling over and going into, in becoming worse than just simply a pullback within an uptrend. All right, here's Russell 2000 stocks. Up top is the SP 500. Down here is Russell 3000 stocks above their 20-day moving average. Okay, pretty normal that you get fluctuations from like 20% up to 80%, 20% up to 80%. That's pretty normal. If the market is really weak, if we're like not necessarily in a bear market, but if the market truly is weak, you get a lot more prints down here at 20%. Okay, you still get the expansion up to 80% because within a downtrend, you still get big up moves. So you still get the expansion of the indicator. But when the market's weak, you get a lot of prints down below 20%, and it just hasn't happened. Okay, even with the carry trade news, got down to 20% last week. Market fell 4 to 4 days, posted one of its biggest weekly losses of the year, didn't even get down to 20%. So the indicator tells us that the market is still in good shape, and beneath the surface, there are no warnings that something is worse is brewing. Here is Russell 3000 stocks above their 50-day moving average. It's a similar situation. When the market is weak, you get prints down here at 20%. We haven't gotten that. We haven't gotten that in several months. Okay, so as bad as this was, and as painful as this was, last week, like there's no indication that the market has like weakness that we don't know about. Okay, now right now you could argue that hey, only 45% of stocks are above their 50-day moving average. It's less than, it should be. You'd think it'd be more than 50%. So maybe the market's not that strong, and I'm fine with that. If you want to conclude that the market's not in incredible shape and it's not about to just take off, that's great. I'm not going to argue that. But I'll argue that the market is not in bad shape and it's not on the cusp of just collapsing. All right, here's the SP 500 versus the 1 month high low. Okay, so when the market's weak, you get repeated plunges down here to minus 2,000, and for us to we got one there and one there, nothing there, and then also in a downtrend, you get it's hard for the indicator to get above zero. It'll get above zero by like 100 or so. But not much more than that. And the fact that we were able to get up here, we're climbing back now. It's not in great shape. This does not suggest the market's about to take off. Okay, because you could argue that hey, this itself over here is kind of a cup and handle pattern, and this thing's gonna break out and rally a whole bunch. But this would suggest that that's not going to happen right now, but it also suggests that we're not going to roll over and fall hard because the prints here just aren't that bad. Okay, and then last one here is this is the SP 500 versus the 3 month high low. Same thing. In a weak market, you get a lot of prints down here, minus 1,000, minus 2,000. We just don't have that. Also in a weak market, you have an inability to move up much above zero. You get a little bit of print above zero just simply because there are going to be some strong stocks, but you tend to get deep plunges, and then it gets capped right above zero, and then deep plunges and capped right above zero. But now, we have a shallow plunge. This was able to get to plus 500. Then we had a shallow plunge here, and now we're moving up again. If this struggles here, then we'll have to reconsider. But for now, to me, this is kind of neutral. It's not great. It doesn't suggest the market's about to take off, but it also doesn't suggest the market's going to roll over. So the indicator says, we're more likely to get more sideways moving. All right, last one. I know this is kind of hard to read. This is what every week I write a report. At Lever Brothers, this is what I've said as part of my conclusion. The internals are doing just fine. They're rotating down and so far are indicative of weakness within an uptrend, not the beginning of a downtrend. Things can change, but for now, this is the case, and we should respect it. Okay, so overall, market's doing fine in the near term, which near term is the last couple months. I would say it's more neutral. It's moved up, it's moved down. We've had longs, we've had shorts. Trades in both directions have worked fairly well, although the holding time hasn't always been very long. The indicators right now suggest that the market is more neutral. It's not in great shape. It's not like the internals are doing fantastic and suggestive of some bubbling strength, but it also doesn't suggest there's a whole lot of weakness there either. So I think more likely than not, we're going to continue to get sideways movement, and then we'll just keep reading the signposts as we go. So that's what I think is going on right now. Fairly neutral market, trades more to the long side than to the downside, but I'm not expecting a huge breakout move in either direction. All right, hope you got something out of this, and I'll see you next time.